right, and welcome back, everyone. We are pleased to welcome David Morgan, precious metals analyst and founder of themorganreport.com. David started investing in the stock market well before turning 18 years of age. Several years ago, he put his long study of the free market economies to work researching the economy, the stock market behaviors, and precious metals, especially silver. Although very familiar with gold, Mr. Morgan believed that silver needed more exposure and would be utilized increasingly as an technology continued to demand more and more of the metal. He has followed the silver market daily for over 30 years and has much of the silverinvestor.com site. It's devoted to education. David, thank you so much for being here. The floor is all yours.
Well, thank you. I want to reach out first and say thank you to the Money Show for inviting me and one of my co-workers, David Smith. And so we'll get on with it. First of all, one slight note. I've rebranded to the Morgan Report. In fact, the report was actually called the Silver Investor for about the first year. For the last 21 years, it's been renamed as the Morgan Report because I have looked at all the resource sectors. So during the last 22 years that we've been publishing, I've looked at cobalt, lithium, molybdenum, copper, cobalt, anything, zinc. But right now, the report is focused primarily on the money metals. There is one uranium stock. There is a couple of technology stocks. So on with the beginning, when Debbie reached out from the Money Show and asked me what I thought would be the most useful to the audience, I said, where are we in the precious metal cycle? Is it too late to buy gold and silver? Many of you follow this market and some don't, but a lot of people are waking up to it. So I want to start with this first slide. And it isn't exactly the way I would draw it, but I can talk you through it. And I think it's very important to understand that all markets usually go in three phases. If you're an Elliott wave type, you can call it 5. There's an up leg, a down leg, a second up leg, a second down leg, and then the major leg up. So in this chart, what we see is the 3 up legs. You have the stealth phase, which is roughly from the year 2000 until and there's no perfect science in this, it's an art, but somewhere around 2007 or so. So anyone that got in the stealth phase did very, very well. And during the stealth phase, one of the most important things to note, if you're young, and even if you're not, you can pass it on to your children or grandchildren, is in the initial leg up that very few participate in. Almost anything with gold and silver in its name does very well. So to get drilled down on that idea, any penny stock with gold, silver, and it wasn't just gold and silver, it was also some of the other resources, but the lithium mania hadn't hit, the rare earth element mania hadn't hit, none of those were off in the future. The uranium actually was participating in the very early days. But the point is that a lot of stocks without much merit went up 10-fold, 20-fold, and 30-fold. In fact, for those that know Doug Casey, I distinctly remember in the early 2000s, I don't recall if it was 2002, 3, or 4, Doug was at the same conference that I was speaking at, and basically from behind the lectern, standing on the podium, said, a lot of these stocks out here are not going to go based on their merit. They're going to go based on the ability of the promoters to promote their story. So that's something to be a little bit aware of, because that part of the cycle during the stealth phase repeats at the very end of the mania phase. So we take off, a lot of money's made, and then there's this correction and people leave the sector. A lot of people moved into, a lot of the promoters and companies, real companies, moved out of the metal sector and into marijuana. That was probably the big thing that a lot of these penny miners they left the sector. It was dying off. Phase 1 had taken place and the correction phase was in place. So away they go, and pot became the big push out of that sector. Now I look at the whole market. I do top tier, mid tier, and of course I have to look at the juniors, but I tier the portfolio toward the big money and the big companies. It's the safest way to go. And if you follow my work into the majors and primarily the streaming companies and the royalty companies who actually did quite well from the beginning till the present day. Not to say they didn't go up and down, they did. But for example, if you bought Pan American, when I suggested it, you're still up like 800 or 900%, probably 10 by what's going on right now. And if you bought, let's say, Silver Standard, which really was a speculation, believe it or not, that stock went from 50 cents to $40. So there's ways to make money, but you also have to be aware of who you're dating, you know, what you are in that company for. So back on track, a lot of people moved off. Then what you get is the awareness phase. And this is where you start to see more institutional money managers. You start to see it in the mainstream news. The financial channels will bring on, you know, Peter Schiff. They'll bring myself on. They will bring, you know, they'll be talking about it, and you get the second leg up. And that's when silver went from basically the 2008 bottom up to about the $21. Yeah, it's hard to tell you exactly the points. I can. Basically, we got a big run. It was actually from the 2008 bottom of $9 up to the recent nominal high, or close to the nominal high, of about 48, the end of April 2011. So that's the awareness phase. And then that disappoints, and it shows this bear trap, and it shows it very small in time. Actually, as anyone that's followed this market knows, it basically went from 2011 until recent days for silver. And it went from September 2011 to the end of 2015 for gold. So gold has been a steady eddy from basically January 2016 until present day, but it's been so slow climbing that most people didn't pay attention to it until it got above the breakout point, which was technically $1,550. So now we are starting in the mania phase. And this is what I want to bring your attention to, is that in this phase is where the most money is made. I want to digress a bit and tell you a brief story that I read as a probably 23, 4-year-old, 25, somewhere in that range. It was out of Forbes magazine. And I give credit to the person, but I don't remember his name. And I'm not sure they used his name. I think they kept it anonymous. But the point was, this was a professional trader, and he really wasn't doing that well. And he took a year off to study markets. And he came back and he killed it in the silver market. He killed it to the point of where he was done. He walked away, never traded futures again, and retired for life. And what he did was he took the middle. And taking the middle simply means this. He waited for the trend to be extremely well established, and he waited for the mania phase to pick up. And he bought silver at somewhere around 15, 16 and sold it at 35. And I think that whole trade was about a 10-day trade. And that was enough, especially if you're leveraging, you know, 5 to 1 or 10 to 1 or whatever. So he actually studied for a year, did absolutely nothing. Now, I'm not big on teaching anyone futures trading, and most people should absolutely stay away from it. It's not a game that is taken lightly, and I do it. I use it primarily for hedging. But regardless, I just want to point out the idea that that people can actually make a great deal of money quickly, even though you're told over and over and over again it can't be done. There are certain unique opportunities where it can be done. Now, I'm not going to tell you it's done easily and it's done often, but it does occur. So I want to be totally honest here with what the possibility is during this mania phase. But you don't want to be too greedy, and you definitely want to have a plan in place well before you execute. This person, this human being, knew exactly what his objective was before he ever put on that kind of leverage. So I think I want to say just a couple more words. I'm spending most time on this slide because this is basically the whole lecture. I'm going to go into more detail. So during the mania phase, we're just starting to get media attention. Well, we're seeing that already. You're starting to see a lot of more, you know, commentary in written form, internet, on the financial channels about gold and where are we in gold and should we have gold. Even the Bank of America says they're looking for $3,000 gold. So this is the beginning of this parabolic move. And the parabolic move I'll get into more here in this presentation. Then you get enthusiasm. Enthusiasm is sort of what happens in all markets eventually. You can go back to the tech sector, and probably older than a lot of you, but Intel just made a new high after new high after new high. And the commentator was saying, I just can't believe it. Intel's making another new high. And that's the way you actually participate in that, taking the middle out that I talked about. If a stock goes like Silver Standard that we had on the list at 50 cents to $40, how many new highs does that company make? And the answer is a lot, and a lot more, and even more. It makes a lot of new highs is the point. So most people say buy low, sell high. Well, you want to buy relatively low and you want to sell relatively high, but you don't want to get too greedy. So then we get into the enthusiasm phase. This is where you see more attention from the media. People are talking about it. People that have never touched gold or silver in their lives are starting to be aware of it. And then the public comes into the market. Now you see on this idealized chart that the public comes in about halfway through the entire move. So if gold's going to, for example, 5,000 an ounce, but it started at roughly 2,000 an ounce, I'm just making up numbers to give you the idea, then what would be halfway between 2 and 5 would be 7, so 3,500. So the public comes in roughly at that. I'm not trying to make the price, I'm trying to give you the right idea here. So in other words, well, David, when is the public coming in? Well, in this thought experiment, what I just told you is when they come in. So they're $1,000 away from coming in right now, if and only if this goes to 5,000. If it goes to 10,000, then you can change the numbers. But I just want to give you the idea. Is the public in this market in a big way? No. The public that's in this market right now are people that probably bought in the stealth phase and have held on all the way through, or people that bought in the awareness phase and have held all the way through and have averaged down, or people that left the market, made a bunch of money in cryptos and came back or whatever. But the general public is not in this market. So then the public gets greedy because just like Intel, gold's a new high, silver's a new high. Silver broke its records. It's above 50. Silver went to 60 in a week's time. Silver's at 75. We've never seen such a high price, which is still ridiculously low on an adjusted, inflation-adjusted basis. Delusion sets in. It's like, oh, real estate only goes up. How many times we heard that? Gold only goes up. Well, that isn't true. And then you get to the top. Well, you want to sell in the strength, which is very difficult to do. I've done it on every run-up in silver and gold so far during this 20-year bull market or 25-year bull market starting 2000, 20 years. And then we get a big correction down, and then you just get a bounce. And that happened in the 1980s. It'll probably happen again. And then you get this straight down thing that happens, and that happened in silver, and it could happen again. I'm not certain of this because it's an idealized graph, and it's based on the paper paradigm working, and I'm not so sure that the paper paradigm is going to work all the way through this time. So why silver, why now? And you can substitute the word gold, why metals or money metals. I'm going to focus on silver. This is the final leg, and I think it will set a record. Record meaning nominal price. They hear a lot about the gold Dow ratio, but I want to show you in the silver terms, it's ridiculously cheap. I know this graph only goes to 2013, but if you can imagine that line over to 2020, it's slightly higher. And in today's dollars, this is from John Williams, shadowstats.com. He used the 1980 metrics to calculate inflation, where you use food and energy, the two things that humans need the most. They need to eat, and they need to do something using energy, transportation, communication, heating their homes, running a manufacturing facility, a factory. I mean, it's food and energy are the keys. And they're taken out of the present CPI. Of course, in 1980, they were in there. So if you use those metrics, believe it or not, the one-day high of $50 in 1980 equates to roughly 600 in today's dollars. That is how much inflation has taken place since 1980. So we've had 40 years of basically nonstop inflation, meaning creation of fiat money, and it has not shown up in the silver market yet. It really hasn't shown up that much in the gold market yet, but it's certainly showing up in the Dow Jones Industrial Average, the S&P 500, and the stock market in general. It's also showing up in real estate prices in many areas of the United States and of the world, and other investments. And of course, the bond market's another story, and it's a big one, but I don't have time to go into it. So the 1970s bull market versus the 2000 bull market. This is from my friend Nick Laird down in Australia. It's goldchartsareus.com. If you're interested in any technical work whatsoever, his fee is very reasonable. I've been a subscriber, I think, since he started. And he does a lot of work in the charting business and really does a great job. So this is an idea that I'm just pounding into everyone, that this next leg up is going to be really, really big and really, really crazy. And a lot of people are going to, buy silver at 30 and sell it at 35 and think that they really did well. And on a percentage basis and divided by the time frame, they made 10,000% on their money if they annualize it. But that's not what we're after. We're after that relatively low, buy it below 30 and wait until it hits 300. I'm joking, but who knows? In a fiat system, it's hard to put a paper price on it, but you get the idea. But you don't want to wait until the last minute either. So I will give you guidance. That's one of the reasons I'm here, but it doesn't mean even though I correctly sold off the first two big rallies, doesn't mean I'll catch the next one perfectly. Anyway, are you on the sidelines waiting? Is it too late to buy? No. What if 90% of the move came in the last 10% of the time? Now, this goes back in history. This is when I first started really being interested in the silver market, because before I really got involved with silver, I was pretty much almost exclusively a gold bug. Everything that I was taught, learned, heard, research was about gold. But then when the Hunt brothers came in, I started getting interested in silver before the big run up, but not as much as I did after the run up, and asked myself, why did the Hunts do so much in the silver market? And that began really my quest in the silver. But the bull market in 1980 went from roughly 1965 when they took silver out of the coinage to 1980, and it went from $1.30 to $50 one day. It was a 50 for one day. So the total move is approximately $48. 42 of those dollars came in the last 13 months of a 180-month move. So if you take 13 divided by 180, that's 7% of the time. And the amount of appreciation, those $42 out of the 48, is 87.5. So when I say 90% of the move came in the last 10% of the time, that's the general idea. Does that mean the same thing's going to happen this time? The answer is no. Does it mean that something similar will happen this time? And history says yes, most likely it will occur. So in 1979, at the beginning of the year, silver's at $6. And it took 14, 15 years to get there. And a year later, it peaked at 50. That was an 800% gain in 1 year. But if you bought it in 1965 and held it, you had a very modest gain. Inflation adjusted, you were still ahead, but you only want silver to go from about 30 to $6. Whereas someone that sold then, it's like, oh, I'm selling at a high. If they would have waited one more year, they would have done fabulously well, but they probably didn't know cycle theory. They probably don't know how markets move. So now I'm going to digress into a little bit of a takeaway on money in general. My biggest study is really on the big picture economically, the fiat failures, and the monetary system at large. So what is the new money? I think before the dollar goes to absolute zero, you're not going to see that. You're not going to see the dollar absolutely worthless. What you're going to see is transition. And of course, this is the big question I've been writing about in the Morgan Report now for several months. And this month, I'm still writing. I'm going to have to start writing as soon as I get done with this lecture. But it's really about where the powers that be, the banking elite, are going to take the general world population, and it's going to be under their control, at least that's what they want, into the next phase, which is probably going to be a blockchain system. And the there are opportunities in the blockchain. We've been writing about the blockchain for, I think, 2 years. David Smith actually handles that part of the report. He's much more studied in the blockchain than I am, and I'm no dummy, and I do look at it fairly carefully, but not devoting the time to it that David does, because I still focus on the big picture economically and the money, metals, resources in general. So the question is, can the blockchain marry precious metals successfully? And the answer is yes, and there's several out there. The one that I am an ambassador for, so I'm biased and I own it. It's the only one that I own. I have a little bit of Bitcoin, but the only cryptocurrency that I own is called Load. And if you're interested in that, the URL, and you can have almost any URL these days, you would just type into your browser ag.load.1 or https://ag.load.1. You computer types know what I just said. That will get you to the website, and you can learn more. And so what I'm suggesting for consideration, and I don't know the answer, that's why it's a question, is it possible the next leg up in the crypto world will be led by asset-backed, perhaps precious metals, cryptocurrencies, or crypto coins? Don't know, possible. So this is, again, the logo for Load, the little logo on the left upper side there. It's a plan for cryptographic silver. It's according to them, and there are others. I am fully aware of others, and many of them are, there's good, bad, and ugly in all of the cryptos. And I'm not going to name any names publicly, but there are good ones that compete with this one, which is fine. I'm not trying to push one too hard. I'm pushing the idea. But their claim to fame is they're building the world's first cryptographic silver monetary ecosystem. They just added gold recently, so it's not silver only. In the beginning, it was. You basically, the way the system started was you could not enter it with fiat. You could not enter it with Bitcoin. You could not enter it with anything except silver. If you were going to be involved as one of the founders, you had to contribute silver in order to become part of this system. I did. I warned everybody not to do it. I said, don't take the same amount of risk. And if you are going to take the same amount of risk as I do, please do it with the amount of silver that you're willing to part with, because most startups, I think there's something like a 99% failure rate on a startup company. It's extremely high. This one has come close, but it's on its way now. I'm very convinced, but don't take my word for it. Do your own research. So a new paradigm. Well, it is. I think you're going to see a lot more gold, silver backed cryptos. You also have one for cobalt. The Democratic Republic of the Congo has one on cobalt, and there's others for all kinds of hard assets. So it's across the spectrum, but the money metals are money for a reason, and that's the top tier. There's two sides of this equation. I don't have time to go into it, but you have the load side, which means basically you contributed silver. And then you have the AGX coin, which is your payment system. This is where you actually transact. So, for example, I am in the system as a merchant, and I discount the Morgan report if you pay me an AGX, which I can take the AGX and convert it to hard silver basically anytime I want. There is a limit, just like a lot of these silver and gold, well, not gold, but silver savings programs, where if you have 1 ounce, they're not going to mail it to you. You have to accumulate basically 20 ounces is usually the minimum, because it costs so much to mail it. I mean, sometimes if you mail 1 ounce of silver, it's going to cost, 25% of what the coin is worth to mail you one coin. I'm not talking rare coins. I was talking a bullion coin here. Anyway, the point is you can convert to the actual metal itself if you wish, or you can keep some of it in your account and transact with it, just like any crypto. So I'm not going to read this to you. I'm just being full disclosure here. I'm an ambassador. I am biased. I own it. I like it. I do not have a great deal of my wealth in it at all. I have it, I say I'm past the experimental phase, but I'm certainly not loading up on Load, but I'm certainly grateful to be asked to look into this from the very inception. And I have used some of my thought processes along with David Smith to interact with the founders of the program and help give them feedback as far as what we think would be some of the changes that have been incorporated in the program itself to be more beneficial to the user, meaning you, if you elect to participate. So I do a lot for free. This Money Show presentation, I'm not getting paid. I'm, again, grateful and thankful that they invited me and let me speak my piece for a half hour. The next step is really the best thing to do. Just go to themorganreport.com. It's remember, themorganreport.com. Get on our free newsletter. If you are inclined to participate in the resource sector and you want timing information, some speculative picks that no one else has, some really unique situations, my favorite uranium company, you can consider being a premium member or not. You don't have to pay me, but you should get on the free list and you will get quite a benefit just from that alone. So what do I offer? My whole dedication is really helping others build and preserve wealth, and that's very important, especially preserving. And what I see for the future, you may not agree. I do consultations, so a lot of you probably don't need my service, but you might need a consultation. Hey, I'm going to put X amount into the gold market I never bought before. I need to store it because I live in a penthouse and I don't want it on my property, and that kind of thing, whatever. I mean, there's all kinds of reasons to consult. I'm just giving a hypothetical, but there's that ability. I have a mastermind service, which is primarily for fund managers and accredited investors. The premium service is really the basic service. That's the service mainly for retail. And I, again, teach how I invest and why I'm successful. And then there's an insiders group only where we have to have about an hour-long call if you're going to get my private number or not. So that's what the report looks like. And I'm really done. I have about 4 minutes left for questions, and I'm happy to answer those. And remember to go to themorganreport.com and get on our free list.
All right, David, thank you so much. We do have about 4 minutes remaining, and some viewers did have some questions that came in as you were speaking. Viewer says, hi, David, love your reports. What do you think about the COMEX deliveries for silver coming December?
Yeah, that's a very good question, and I'm still thinking about it. In fact, and I'm not trying to sell a membership here, but I got a very detailed email from one of our members, and I haven't had time to do it yet, but he had a couple people he cited in that email to me, and I got to watch the videos and listen, and he wants me to verify if this is correct and the COMEX is basically in default now. And the answer is I don't know, and the answer is I probably will not know, because as connected as I am to most of the refiners and most of the wholesalers and many of the fund managers that trade not only the SLV but physical as well, I am not connected to the bullion banks. And that's where the key is. It really is. I mean, I've got like some insight, lightly you might say, into like one bullion bank, which isn't helpful enough for me to know. But I can build a strong case on what's called circumstantial evidence. I mean, that's the way a lot of, lawsuits are done. If it's, shows up that that car was at that place and, well, if this much silver is moved off the exchange and blah, 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 blah. So I'll build a circumstantial case to verify what I've seen so far. But gut level honest, I'm not perfect and I know my limits and I'm not connected to the bullion banks. I don't think they like my message. So anyway, there's the answer.
All right, thank you. A few attendees have written in about this. They're referencing the 1980 run-up with the Hunt brothers. They're wondering, do you think the rise in silver prices would have occurred anyway without their hoarding of silver? And are there any accelerators that you see right now like that at this time?
Yes, I don't know who's listening, and I try to stay objective and fair toward everyone and everything. I'm human. I'm certainly biased, as I said, like the load program. But now Jeff Christian of CPM Group, which is on Wall Street, basically a relay street over, but he's done, I think, the best analysis of the Hunt brothers, and I'm convinced after going through his work very methodically with a fine-tooth comb that the silver situation would have occurred without the Hunt brothers. It might have occurred later, but it probably would have occurred. Do I see any accelerators now? Well, yes, I see a lot of people calling me up for consultations that go something like this. Hello, David. I've been following your work on YouTube for 4 years. I've got $1 million in the bank. I've never bought precious metals in my life. How do I do it? And I had about 4 or 5 calls like that in March when we got this big, pullback, that people that kind of know the big picture but have never taken action started to take action. So I think that's one data point. And it's not one person. Again, it was like 4, which certainly I'm not going to make a huge deal about 4. It's just a type of client. Most of my clients are small business owners and investors, and professional and retail. But anyway, so yeah. And the other catalyst is what happens as the silver supply physically tightens more and more. That's when the industrial side is going to have to come into the equation and start paying prices that investors pay. So their cheap silver through the situation at hand, which seems for so long, will cease.
All right, thank you. Another attendee has written in asking if you have one particular favorite silver junior producer.
Producer, probably Max Silver.
All right, let's see here. We do have about time for one more. Let's see if one has come in. Someone was just curious as to what's the potential advantage of buying load coins?
Yeah, I think it's because of the way this market's going to transition into the blockchain. So if cash is outlawed and everyone's going to be on the blockchain to transact business, you're going to have to move to that modality anyway. So you may as be one step ahead. Now, you don't have to buy into anything I just said, do your own research, but the advantage is portability. You can take it with you on your phone. So it's the same argument you get for why would you have Bitcoin. I'm not a huge fan of Bitcoin because it really isn't backed by anything. I know it's limited, which is good. But in this one, you're actually able to take silver and gold physically off the market anywhere in the world, anytime you want. You're going to have to wait for the postal service to get it to you, but nonetheless. So I think there's a lot of advantage, especially for the way millennials think, rather than a stodgy old men such as myself. But I see that's the future. And I want to continue to live my mandate. I do want to change the world. I want an honest monetary system for everyone, everywhere. And as idealistic as that is, I think this is one way, not the only way, one way to achieve it.
All right, David. Well, that puts us right about time. Thank you so much for being here. Always great to hear your insights on the markets, and it's a great pleasure to speak with you today.
And my pleasure. It's all mine. Thank you so much.
Thank you.